Hello, everybody. Welcome back to the Tokyo FinTech podcast, and we welcome Martin Kassing, who is the founder and CEO of Upvest. Welcome, Martin.
Hi, nice to be here.
It's great to do everything virtual during these times. So I'll just hand it over to you, and please tell us what Upvest does and what problems you're solving.
Yeah, thank you very much. So Upvest in general is a securities API. We are a company that is based in Berlin, around 25 employees, and we get really excited about building the securities infrastructure 2.0. That basically means we have seen that a lot of fintechs are growing pretty rapidly, or neobanks, but that don't have the corresponding fintech infrastructure. It basically means the custody, the clearing, and also the issuance of securities is really expensive and also relatively slow. And so we built this from scratch based on the blockchain via asset tokenization to help these players in the future. We are BaFin licensed, so we received the crypto custody license. It's a specific license in Germany that you can actually custody securities, but also cryptocurrencies. Had around 50 million assets under management with our partners last year and are strongly growing. And our team is composed of people from Klarna, TransferWise, Onfido, Goldman Sachs, and other big banks and fintechs. So pretty diverse team that gets really excited about building the infrastructure of tomorrow. Some of our customers, so we do this actually since 2018, we have been shifted a little bit from cryptocurrencies to asset tokenization, as there have been quite some regulatory changes, specifically in Germany. So one change was that you can distribute real securities to retail customers completely on the blockchain. So it was the first country that allowed this. And the second big change was the crypto custody license, where you now have a specific license you have to obtain to custody certain securities and cryptocurrencies. So these two things actually made Germany one of the most advanced countries in the world for asset tokenization. And we benefited from this because one of these fintechs, these neobanks, they now actually actively work with us. So we had around 50 million in 2019. We are on track to have 300 million assets under management this year, and also bigger neobanks and fintechs that would like to work with us. Before we actually go into the product, I think one of our thesis is that neo brokerage is on the rise. So you see really big digital players like Trade Republic, Razer, and Scalable that have raised a lot of money, and they find a new way to sell now securities to, I would say, our generation. They really care about UI, they really care about costs, they really care about internationalization. In the second line, you have a lot of, I would call them blockchain disruptors. So Exporo, for instance, they sell real estate securities on the blockchain to retail customers, but you also have blockchain banks, Bitwala and Bitpanda. So they really officially get banks or work with banks together and make it very simple digitally on a mobile phone to buy cryptocurrencies, but also tokenized assets in the future. Those are also our clients. But then you have also these really big companies and these high growth companies like N26, Revolut, and Monzo, and they also have to expand their businesses towards selling assets, securities, for instance, but also cryptocurrencies. And one of the things that they get really excited about is that they would like to distribute their solutions on a European scale, because these fintechs, they didn't just start in one country, they also want to expand internationally. So Monzo goes to US, Revolut is already in, I think, more than 50 countries, and N26 also wants to expand. So they need like new rails to internationalize also the brokerage of securities. And lastly, you have these very big tech companies like Uber, Facebook, and Google. They all move towards fintech because they have the customers. They have actually also the trust partly from their end users, and they also partly manage the cash flows. Like for instance, at Uber, they manage the cash flows of their drivers while not just offering retirement investment product, which they actually start in California. But then they also have to think about what is the right infrastructure to access these securities and to trade these securities. One of the problems that we have encountered over the last 12 months is that it's very hard to internationalize with the current rails. You have to find a custodian, which is someone that keeps the securities in every country. And these custodians, they have to work with clearing houses, which is kind of like master custodian that swaps these assets between these different countries. This is still relatively manual, surprisingly, and you have a lot of different custodians and clearing houses in Europe. So you have a different clearing house in France, you have a different clearing house in Germany, you have a different clearing house in Switzerland, you have a different clearing house in Scandinavia. And just to give you an example, when you want to transfer one security from Switzerland to Germany, it costs you 90 euro per clearance. If you have an investment of, let's say, 501,000 euro, it's not even worth it anymore. So that's why a lot of these fintechs, they just start in one country, like for instance, Trade Republic, Exporo, and so on. And if they want to internationalize, they really have to find either a big partnership with a bank that's connected to all of the different things, or they have to work with different bits and pieces in all different countries with different custodians, clearing houses, which is very expensive and eventually doesn't provide the experience that the end users want to have, which is instant and relatively cheap. The second one is the asset variety. So when you actually work with a partner, you're limited to their assets. So if you work, let's say, with an exchange like Lang & Schwarz and Börse Stuttgart, you have just these assets, but those are just public market assets. You don't have, for instance, access to cryptocurrencies. You don't really have access to fractional ownership of real estate. So what we can also provide is actually a private market assets that got tokenized and eventually have also some liquidity, plus the public market assets via derivatives that get tokenized. So it's a broader range of assets we can actually also offer our rails. And the third one, which is kind of a result of all the top two are the high custody costs. So pretty much when you work with a custodian, like for instance, Bada Bank, they charge you 40 basis points per retail custody per year, which is really, really high when you think about the margins you can make actually in a security brokerage. We reduce these costs by around 80% and can also offer this internationally. This is pretty much what we can offer. It's international custody, it's licensed by the BaFin, it's more assets, it's more affordable. So we replace a lot of legal work with an API. You can just plug it into your app. You have a certain reliability, and you also can, for instance, integrate in your data warehouse where you can actually automate certain processes. So we believe really an API is the future. The big infrastructure business like Plat.com, for instance, or Stripe have shown that this is the future. And I think we could provide actually pipe for these securities at the custody and the clearing via our rails. And this is a use case, Exporo. So Exporo had this problem. They were in Germany. They're selling actually real estate to retail customers online. So you can buy like a fraction of a house. And they were using traditional security rails before, and they could see actually this is really expensive and not international. So they came to us and asked us, hey, is there not a way to build this better from scratch? So we did this, and we built pretty much then the whole issuance, custody, and clearing infrastructure around this. And this saves them around 4 million euros per year already. They also have another possibility that they can go across borders on, let's say, the blockchain rails instead of the traditional banking rails. In terms of security, everything runs via smart contracts. So you have a clear trail as well. So it's completely compliant. It's completely approved also by the BaFin and has massive benefits for customers like Exporo. We received the license this year. So there's a specific BaFin license. We take care of security a lot. So we have a designated security team that makes sure that actually private keys don't get lost, but also there are other things like restricted wallet handling, authentication, access controls. So we always have to make sure that the end user actually gave the permission to do a trade, which happens with the 2FA on top, so that actually our tenants, so the customers, these fintechs, can execute the transaction on behalf of the end user after having received successful authorization from the end user before. So this was actually not a simple product we built, but it gives the full flexibility kind of to the tenant without actually limiting the security of the end users itself. So what is the big vision? We are in talks with exchanges and issuers, and we get really excited about offering programmatic access to securities in these fintech apps. It looks a little bit like a Stripe for securities. So just imagine you're now a fintech and you want to offer, let's say, the top 100 ETFs. You want to offer a real estate to invest. The perfect way for us would be if there is a single call on our API and you could onboard these assets, but you can also offer the trading of these assets. And everything then kind of runs via a smart contract. So there's a clear trail behind this. And you also run it on our wallet infrastructure, which is per definition more international, also this year licensed by the BaFin. So exciting times ahead. We see actually in the Corona times that bigger companies come to us, including like the Sparkasse, but also really big asset managers, and want to talk. So we have to see if we can also convince them going that direction. But I think Corona is kind of an accelerator for digitalization in general. And many of these companies think about a proof of concept. And we see kind of like a new world with these fintech players that really want to offer these solutions internationally, cost efficient and with a great user experience, but also on the asset issuer side. So companies that have the assets and want to distribute them, that they're more open towards the distribution to fintechs because they see that these fintechs grow so rapidly and they have to think about also being integrated with these fintechs in the future. So exciting times ahead for us.
Fantastic. Thank you, Martin. Let's talk about you personally for a moment before we come back to what Upvest does. We've heard from many fintechs that are talking to VCs, for example, that they would love to see much more founder experience in the VC ranks. Otherwise, you're talking to somebody who's just looking at the spreadsheet and trying to validate numbers, but doesn't really fully understand the business model, maybe. But your experience is exactly the reverse. You started off as a VC and then you became a founder. Maybe talk a bit about your background and your history.
I started business administration and had the luck to join a private equity fund when I was relatively young, in the age of 22 in Frankfurt. And this private equity fund was investing in traditional software companies, but also mechanical engineering companies. I was involved in growth investments, but also LBO investments. And for me, it was actually a great time because I learned a lot. I had to analyze every week like 4 or 5 different companies. I really had to find a grid to assess, is this a good company or a bad company, which I still use, to be honest, to this day, to really analyze, okay, is this the right business model or not? I have worked for this private equity fund for 5 years, started as an analyst and associate investment manager. At the end, I was an operating partner and helping these portfolio companies to clean up their finances, which I think was also interesting to see because I had to learn to communicate difficult decisions from the investor and actually to make them real in the financial world. So pretty much, saving costs, actually optimizing on certain products and so on, which was an interesting learning. The fun part was though that I I was 27 when I left the private equity firm. I always felt that the other side is cooler and is more fun, the entrepreneurial side, because they could really drive innovation. They could really actually create a culture and make a lot of people happy. We were always the guys that invested in these businesses and had the pressure to have return on investment. So sometimes we had to put pressure also on the management teams. But actually, I wanted to really be on the other side and really build something that's very sustainable. So I started my first company pretty much with a prerequisite that I can just do my spreadsheets, which completely was wrong. So I made a lot of mistakes. And the first company was a massive success. The company thereafter was a payment gateway and a browser extension, was a little bit more successful and also recently then sold to Klarna. It was in the US. I came back then also from the US. And there I kind of learned all the topics that are so relevant. So really motivating your people, understanding product market fit, making sure actually that you build something fundamental with a strong vision, but also don't miss out on the small details at the beginning. This is something you don't really learn in private equity. So there is probably something in it that, as a VC, it would be really helpful to have operational experience, because most of the issues that you face are people related. Either you pick the wrong people, or you communicate badly, or you pick the wrong co-founder that doesn't want to have this high stress environment when you raise some VC money. So I think I learned equally as much in my entrepreneurial endeavors than in my private equity endeavors. I have to say though, the private equity experience is now super helpful, because in this fintech world, we have to make a bet on our customers. We sell them infrastructure. So we have to assess if they bring volume in the future and if they will be successful to a certain degree. You can even say that Upvest is kind of like a meta fund that provides certain infrastructure to fintechs, right? If they are successful, we get like a small cut out of transactions or the custody. If they're not successful, we make no money. This is something that I benefit a lot from, because I still have my grid and can look at these businesses and can see, okay, they have a likelihood of being very successful. And then we can go into pricing more aggressively and say, okay, we skip the fee in the first 3 months because we know this company will be really, really big. And later we make the money. If I wouldn't have, let's say, this grid, I probably would just randomly pick customers, or randomly these customers will pick us. Then there is a high risk that, 50, 60% of these customers eventually will fail, and ultimately we will never grow. So I think this was certainly really helpful. But I have to say, without the experience of failure in my previous startups, I wouldn't be successful at all right now.
So is this version of Upvest that we've just seen, is that very much like the initial version? This is what you envisioned from the start, or were there a pivot or two built in between?
There were a couple of pivots. So one of the things that I also learned from the strong VCs is they say good founders pivot fast, especially in the seed phase. So originally we had the idea to also offer cryptocurrencies, and we figured out that the whole wallet topic was super complicated for many people. So we started very early on building a wallet. It was very simple for end users to store their cryptocurrencies in a non-custodial way, because in 2017, 18, that was the thing. Everyone wanted to have a wallet in a non-custodial way to keep, they manage their kind of the private keys. But we figured out over time though that most of the volume is actually on custodial exchanges like Coinbase, also Binance. And most of the end users, they don't really care so much to keep the full possession of their funds. It's more important for them that they want to make sure that the funds don't get lost. So we had to look in this more and more. So we continue with a non-custodial model, but we thought, why not just actually using this technology in an API way that every other company can use this in a very simple way. They don't have to build the infrastructure themselves. So like kind of like the wallet as a service. But then we figured out it's not just about the wallet, it's all about the fee management, about the data management, about how do you distribute the tokens from the smart contract into the wallets? How do you actually make sure that the end user gave you authorization to send something out? So there was a lot of stuff we had to build around. And in 2019, actually, for us, there was a surprise moment as the German government kind of approved the distribution to retail clients completely on the blockchain without a paperback. And this opened like a complete new spectrum, because now issuers, they can now really take normal securities and distribute on a blockchain to end users. And we have seen that most of our clients actually were traditional fintechs, not necessarily anymore these crypto platforms. And we pivoted then towards these companies and focused on them. We still have customers that also sell cryptocurrencies like Bitwala, for instance, or we provide the infrastructure, but also they think about how can I actually expand my asset variety? How can I offer more assets to my end users? And they go also towards, let's say, asset tokenization. So I would say we had two pivots. One was actually we went towards an API, towards the whole infrastructure. The second one was towards licensed security distribution. I would say this is now very close to a long-term vision, because we have customers that grow. So with Explorer, we had just this month, just on our rails, 30 million assets under management, which is quite cool. And we start like a secondary market with them. And we have bigger fintechs, but also asset issuers and distributors like Börse Stuttgart that really say, okay, this is now the future. Now we want to build this. I'm more comfortable that we don't pivot anymore.
Maybe a little bit more about this unique German thing of the custody license. Custodians in the traditional financial markets are also there to create bankruptcy remoteness, right? So if your broker goes bankrupt, your assets are held somewhere else and you can retrieve them, even if in a case like we had with Lehman Lehman Brothers, that might take quite a long time to get your hands on your assets again. How is that managed under the custody license that the BaFin has given up?
You still have the storage of the security. It lives pretty much on the blockchain, and this is separated, let's say, from the issuer. So an issuer actually distributes the security, so you pay them fiat and then they send the security. So even if the issuer goes bankrupt, they have typically like it's a designated SPV where they hold the security in. So in Exporo's case, Exporo is not the master issuer. They have like separate entities, GmbH in Germany, where they actually buy the security and ring fence also the security. And this security is then distributed into our custody. So even if Exporo as a company goes bankrupt, you still have this individual security in this SPV stored in our custody. So it doesn't mean that also this goes away. The challenge with Lehman Brothers was that they were like the master issuer. So they were kind of like the owner or the counterparty of all of these certificates and securities, and they went bankrupt. So that was the risk. So here you have by definition already like different entities for different securities. However, what is important, you see now also a trend that there are some companies that would like to tokenize certificates. So what's similar to what Lehman Brothers is, or derivatives. And one of the things that we take care of is that we make sure that are funded, these securities, so underwritten pretty much. And secondly, that you have the possibility also with different issuers. So it's a very early start, but for us as a platform, it's also important that we provide flexibility. So you say, I would like to have a derivative, let's say from BNP Paribas. You can also have this derivative, let's say from Goldman Sachs. But there will be a risk involved because you need an issuer and you have to trust the issuer. So the only thing that we can do right now is that we diversify and that we can programmatically actually have the smart connect to individual entities, not like the master entity.
Got it. Thank you. Let's continue just on the securitized derivatives route. So because you have Börse Stuttgart here, the Stuttgart Exchange, which is the largest retail exchange in Europe and specialized in this type of product. But globally, there are other markets as well. Hong Kong people, the Hong Kong Exchange, they love the product as well. So in your future plans, are there visions of coming to Asia?
100%. I think Asia is one of the most attractive markets. US, Europe, Asia, all interesting markets. I think why Asia is a little bit difficult for us is because of regulation. There is not a clear regulation now in place. I think in Singapore there is some, but we would be totally open also to work with an Asian exchange. And this makes it super interesting because there is this instrument of a certificate, which is a derivative where you bet against the bank pretty much. It would be super cool to find partners in Asia because then these certificates could be also distributed actually to European customers and the other way around. So it would be pretty similar rails, similar to a TransferWise to buy securities in different regions, which lives on the blockchain and does not have, let's say, the custody and clearing restrictions that you see right now. Right now, when you want to, for instance, settle an asset in Asia to Europe via, let's say, the clearinghouse and custody, it's really, really complicated. You can just do this with really global banks like HSBC and so on. But you could theoretically also, when you find an issuer in Asia that actually underwrites this security, you could also tokenize it and distribute to a European customer. Of course, you still have to do KYC. You still have to make sure of all of these regulatory requirements. But I think you don't have to work with the national custodian or national clearinghouse anymore, which makes everything cheaper and faster.
And so in Japan, since May 1st came into effect, we actually have security token regulation. Quite comprehensive, and some smart people are trying to make sense of it and figure out the initial issuance. So it's expected to be somewhat slow start, but I think you'll see more traction in 2021. So it will be an interesting market for you. With regards to your platform, so you do the issuance and you do the custody. The secondary trading, really, when you need liquidity to transfer out of your position, how would that operate? That's why you have partners like the Stuttgart Exchange, for example, or ultimately what's the solution to that part of the equation?
So we don't have the fully fledged circuit solution yet. So we provide a piece of it. You have to think about like a customer wants to send out or wants to trade a security. So they say, I would like to sell this for price X. Then on a platform like Exporo, there's another buyer and says, I buy this for this kind of price. Then there is a 2FA on the seller, and the teller gives the authorization actually to sell this. And we kind of block this security until fiat arrives on the bank account of Exporo. Because they're anyway the issuer, so they kind of control the smart contract, and they actually then have to whitelist this customer. And once the fiat arrives, they have the authorization then to send this out from the end user's wallets to another end user wallet after the successful 2FA from the selling end user. What we think about right now is also to offer the fiat rails together with a bank partner, or maybe even the connection to payment gateway big ways, because then we have a full circle. Then we can actually say, okay, fiat has arrived. So once it arrives, automatically the security goes from one wallet to the other. We're not there yet, but we look for an e-money partner, and we start probably the talks in 1-2 months to actually have the full-fledged rails also for the clearing.
In terms of real estate, there wouldn't be that much of a transaction volume, but with securitized derivatives, you can hit quite a bit of volume, especially if volatility spikes. So you need a robust trading platform basically for that.
You need this. I mean, with the derivatives, the fun part is that you just mirror it on the tokenized version at the beginning. So you really have the same security deposited at a normal custodian in one country though, and just a market maker that kind of always underwrites the position. So that makes it a little bit easier to internationalize, and you don't have to use the clearing houses for, let's say, the internationalization of this asset. Nonetheless, when you go into the clearing, you would like to have a partner that actually has the fiat account, and this fiat account needs to be kind of mirrored to us that we can actually automate them. Programmatic can send this out. This is relatively easy when you have a big issuer, because big issuers and market makers are very big banks like Goldman Sachs, Morgan Stanley, and so on. The question is, if you directly transfer the fiat to their bank account and they get the authorization then via our API to send out the security, or if actually we get the ping on our bank account and we give the authorization. This is not necessarily clear because there are some legal questions, but also some questions about who should actually own then the final transaction from the regulatory side.
From a technical perspective, the end user doesn't have to know whether it's blockchain, what type of blockchain it's underneath, but what is ultimately your underlying technology?
So we build on Ethereum right now, mostly. We see that a couple of customers would also like to have a hybrid solution like Hyperledger. So we have to see how this evolves. Right now, Ethereum actually is good enough because it's not a high frequency trading market anyway. So it kind of works, and you can still, broadcast a transaction and then it gets settled later. It's just then a question about how much fees do you have to pay and if the transaction actually gets passed. But Ethereum works for us right now. We are still positive that there will be also a massive upgrade about scalability. If the upgrade takes too long and we are forced to build on another blockchain, which is still fine for us because we have built our technology to be blockchain agnostic. So we can still, with our API, access different protocols. It's easier if you have a hybrid solution because it's easier with the fee management, the data management, and so on. We have built it the hard way at the beginning, so building on a public blockchain, because we think this will ultimately be the end game, given it's open source and is innovating faster and it's also more open to be connected. But we don't know. I mean, there might be a gap of, let's say, 1 or 2 years that we also have to offer next to Ethereum Fabric, for instance, to actually scale the operations. We're not at that point yet, but if that point comes, we have built our architecture in a way that we relatively easy can integrate this.
Can we talk a bit about economics? I think in Paris earlier this year, you presented a comparison, the traditional way that you had on the slides for Explorer versus your approach now. What does it actually look like in monetary terms?
Explorer worked with a traditional bank in Germany together, a traditional custodian, and the traditional custodian charged them certain basis points and a minimum fee per customer. The minimum fee per customer was 40 euros, and their average ticket size is relatively small. So you invest like 1,000, 2,000 euros. So a pretty high average fee per customer, especially when you have small ticket sizes. And this is pretty standard for custodians, that you have a minimum fee per customer per year. One of the challenges for Explorer was to reduce this average fee per customer per year. And we reduced this by around 80%. While it was around 40 basis points for Bada Bank, for us, it's more than 10 to 15 basis points. Plus, there's also the whole reduction cost of the issuer. When you issue a security in Germany, you have to find an issuing agent. In that case, it was the Kassing Bank, and they charge you around 25,000 euro to issue a security, which is pretty high. But now you can actually issue your own security via a smart contract and you file your own prospectus. And this costs just a couple of €100. So you reduce probably also on the issuing side 90%, which is also pretty phenomenal. So you can actually say on the issuing side, you reduce cost, on the custody side, you reduce cost. And the third one, which is not necessarily direct cost saving, but it enables you internationalization, is you don't have to rely on clearing houses and local custodians. You can actually settle internationally. So this is also cheaper, but it's more importantly, you can internationally much faster. And this was also a huge thing for Explorer because they have these amazing German real estate investments. And now they can offer them also to people in Spain, Italy, France, and theoretically even outside of Europe, which is for them really important to grow. And this is, by the way, what we see also with a lot of fintechs. They think in terms of internationalization very early on. For them, it's a really big strategic move to not just offer the service in Germany, right? Because they build like a digital experience. They want to actually offer this preferably worldwide.
It's very interesting because we had a number of conversations in the past where we talked about the prices of security trades going to zero, for example. Like Robinhood in the US started that to some extent. They had a conversation with Mikhail Abdullah from 8 Securities who did the same in Hong Kong and actually even before Robinhood. And then in October, October in the US, Charles Schwab and all the other discount broker went to zero. So you've got already minimal costs there and really putting the incumbents under pressure. You're moving to zero the issuance cost and the custody cost as well. So we can put together the whole value chain that really becomes inexpensive. So in order for you to become a unicorn in turn, you need to get really massive volumes through your pipes, right?
Yeah, that's a challenge. And the good thing, though, is there are a lot of fintechs. They have a lot of money and they grow really fast. So this is a lucky situation, I would say, because if we would have to work with traditional banks that are not so digital, it might take a little bit too long to build up the AUM. But we see strong appetite from the fintech world, and not necessarily just the fintechs that are separate companies, but also fintech departments of bigger banks that would like to tokenize something, offer this to their investor base. So I would not discriminate that they're just these neo banks and neo brokers. They're also pretty innovative banks that say, okay, this is the future, let's build something here and try it out. And we are open towards both, obviously. But yeah, you're right, you have to bet on the right companies to get the AUM. And we made also a couple of mistakes in the past, just trying out some smaller businesses that never really picked up, because the mortality rate actually of a startup is at 90%. In the fintech world, you don't see so many companies actually really also scale and grow. So it's important to bet on the right companies.
Mortality is an interesting term during these times, but your fundraising situation is rather good. You closed your round at the end of 2019, I believe.
We took the right timing here. So we closed our round with Notion Capital, Holzbrink Ventures, and Partech last year, our Series A in December, which is amazing because right now we have the funds also to really scale and hire a lot of people. So we hired a lot of people. We hired a CTO from TransferWise. He was responsible for the API business there. We hired a VP of sales from Onfido, so another kind of unicorn from UK. We hired someone from Börse Stuttgart, people side. With these great people and also with the new customers that would like to talk with us right now, I think we are really comfortable that we can move the needle this year and next year. And our funding is enough until the end of next year, which is quite a luxurious situation as a startup.
That is quite good, yeah. Being able to look out 18 months. What would you say the typical implementation cycle is for a fintech? Let's say a fintech or technically savvy incumbent who knows what APIs are and can work with this type of architecture.
We strive to be as simple as possible for developers and for the teams. So what typically happens is that we have a kickoff. In this kickoff, the engineers stick together and discuss pretty much the integration either on Slack or via chat digitally. And the customers, they could integrate this literally in a couple of days. But there are also customers that need a little bit more hand-holding, and this is both is fine for us. I think it also depends what you want to integrate. So if you just want to integrate, let's say, the wallets, it's relatively straightforward. If you want to actually integrate the issuance side, then we need to define certain rules and certain terminal with the customers. And if you want to integrate, let's say, the fee management, data management is also kind of a thing. So I would say just purely from the engineering side, it's relatively fast. You can integrate this in 1 or 2 weeks. Where we typically have discussions around is about the workflow. So the user experience, how it should be integrated, how it should be communicated from the legal side to the end user, because we are kind of like custodians. So the end user needs to know that we kind of safekeep the assets. KYC data. So we typically have to find a KYC sharing agreement with the clients. So we offer the KYC as well with a partner. But if they have a KYC partner, then we actually create a sub account to this customer that we also get the KYC data passed. Yeah, that's pretty much it. And then pretty straightforward. So what we still do, at least for the first 3 to 6 months, we connect our Slacks. So kind of like a chat room. So when they have a question, they can always reach out to us. Then we try to fix this as fast as possible.
Other players in that space broadly, like securitized, tokeny solutions come to mind. Where's your differentiation versus these players?
So those are platforms where we really buy the assets on their platform, and eventually they're more on the, I would say, the issuance side. So they have their smart contracts and they have their compliance layer, and they make sure actually that the specific person actually is eligible to buy it, and everything runs smoothly on a smart contract. For us, our customers, they often have their own smart contracts because they're issuers, so they have to own the smart contract themselves, but they need technology pretty much with it for distribution. So we have called distribution API. It's a very easy way to call the smart contract programmatically and to whitelist certain things. Plus we offer the custody, so they don't offer the custody themselves as well. So we are licensed custodian as well. Plus we also offer later the possibility to do the clearing. So I would call ourselves more like a full stack solution and an API. So we always would like to be integrated in their existing flow. They should not be redirected to another platform, which is super important because every redirect you lose 30 to 40% of the customers. So it should be like a very simple, slick experience where the end users don't even know that you use the blockchain in the platform of our customers.
Fantastic. Thank you very much for the insight, Martin. Any final comments comments on your side?
The ecosystem Asia is super exciting as well. So I hope that we could share some light on the German ecosystem, European ecosystem. But Upvest is a global company, so our technology can work all over the world. So if there anyone in your audience who would like to reach out to me anytime.
When we have in-person meetings again, if you're here in this part of the world, we'd love to have you at the Tokyo FinTech Meetup live as well.